Joining us to talk about the market today, though, first, Paul Hickey, co-founder of Bespoke Investment Group. Kourtney Gibson still with us, president of Loop Capital. And Mike Santoli, over to you on how convincing the bounce was and how much money was being put to work after such a brutal day yesterday.
I think the bounce, I think the market acquitted itself pretty well here. The challenge is always that a reflex bounce that's really just kind of a snapback because of overstretched conditions is going to look very similar to a real start of a genuine recovery. I do think if you look at the volatility index going down from nearly 25 to below 20, that's a spike on the chart. That usually means that some of the anxiety's gotten drained out of the market. Some of the stocks that got hard hit yesterday really just got caught up in the undertow, did recover today, so I think it's okay. But in context, the S&P really just regained the intraday losses from yesterday. There was such a big gap down into yesterday's open. We have not yet gotten above that. So I think it's, you keep it on a short leash, but the market really didn't kind of give you anything today that said, uh-oh, there's something sinister behind it, there's somebody's trapped, somebody has to sell.
But Mike, would you also say, the intraday picture was interesting. On Squawk Alley earlier, the Dow went negative. In and around the European close, which suddenly turned negative in the last hour of trade on Europe. And the fact that we picked up again off that brief flirtation with being in the red, quite encouraging.
Quiet news day, right? No new headlines really on the trade or currency front. And my interpretation of that, Wolf, is that once you get later in the day toward 2 o'clock, you realize that nobody is out there forced to sell. It doesn't seem as if there's anything systemic or any real stress in the system after yesterday's sell-off. And so fine, you might as well do a little bit of bargain hunting.
Well, we also heard from Larry Kudlow, Kourtney, earlier on Squawk on the Street out of the White House. And he said, look, talks are still on for September. And he didn't sound, like there was this new super aggressive posture. They want to go after China for currency manipulation. They want China to move faster. That's how he defended the latest round of tariffs. Where's the market in terms of expectations for a trade deal and just how much sort of escalation at this point has been priced in?
Well, you know what's really interesting, and I just want to go back for a second about what Mike was saying. What you want to see are the sectors that led us into the downturn, like we saw yesterday, the massive selling in tech across those sectors leading us back out this morning, and we saw that. So sorry, bears. We're seeing the trends that you typically want to see when you're coming out of what really was just kind of a blip is what we'll call it. I think the trade tensions are absolutely going to still be there. I don't know how Mr. Kudlow thinks that China feels right now. I mean, if you want to go negotiate with someone, do you sit there and, do something really bad to them and then say, oh, no, let's come back to the table and talk about it? I mean, I think we're not playing very nicely in the sandbox. By the same token, I think it's in everyone's best interest that we figure out a way out of this and that we move forward. It is in everyone's best interest. It's in the best interest of American companies. It's in the best interest of Chinese consumers and also Chinese companies for us to be able to work this out and work it out together. I would love to say that this is not going to be a political ploy for the 2020 elections, but unfortunately, I think that's the world in which we live right now, and it's likely not going to come to a conclusion likely until the latter part of next year. That's my personal bet. Some economists may disagree, but I think this will drag on for a while.